Welcome to commodities. However, we're going to have a look at the US dollar in case you haven't looked at the currencies. So with the US dollar here, we can see that it's arrived at 80 here, and we have, in Elliott terms, we have a particular wave 2 low in place here as well. So we may see further upside here, quite a bit actually. But in the first instance, what we can sort of expect is that we're looking at a little 5-wave structure here, and once that's complete, if we do get that 5 waves there, which I think is the case, then we'll get an ABC back through here. And because we got 5 waves in a different direction from the move down here, that means 5 waves here will produce another 5 waves here. And the reason I'm saying this for is because it will put a lot of pressure on the currency. So that's sorry, on the commodity. So 80, 82.25, 80, 30 here is the important point here. Now, we can have the market move above it here, but if it eventually finds it as resistance here, then we can move down through here. What we're looking for in terms of commodities moving much higher is actually a breach of the 80 here and coming down and taking out some old lows down here. And if that was the case, then we'd see the US dollar move much further down, the euro move much further up, and the commodities would move up there as well. So in the first instance, we can expect something like this here. So we can expect commodities to, not all of them, but many of them be under dollar pressure, so to speak. But we also have to watch out for too is though this here can be classed as an A and a B and a C, a 5-3-5 structure, but it also could turn into a larger 5-wave structure. Now, if it does that, we're still in the same situation that we're getting 5 waves here in the opposite direction here. So 5 waves here would actually, in fractal terms, would actually produce a larger 5-wave pattern coming up through here after we got an ABC through here. This is a motive wave here, 1, 2, 3, 4, 5, ABC. That's a motive wave there. So with eight waves. So we just got to be careful how this sort of develops through here. So it'll be all eyes on that level 80-30 as support or not, and also if it develops further past a simple A, B, and C strategy here. Okay, with that in mind, and it won't affect all commodities, etc. But first of all, the gold market here. Now these counts here may be different from what we've got on the Elliott Wave on the website, but that's okay. It's good to explore different counts and possibilities and trade setups and so forth. So in this DayAhead report here, we've always pretty much had this as the A wave, the B wave, and the C wave here. And the C wave here would be in 5 waves. So just drilling into that as a wave 4 here and then a wave 5 down. So with that in mind here, we're looking at this being wave 1, or basically this 5-wave structure here. And currently you can see that we're in the long, strong 3rd wave here. Okay, there is a case which you'll see in the Elliott Wave section where we're looking for a top in here as well, and then it folding over from down here as well. That's certainly a possibility as well. And it's always been a real game of support and resistance at the 1300 here. So we'll see that play out. But let's just sort of drill in here a little bit further through here. So as I mentioned, it's possible that that the market can terminate here and then move down through here. So we'll bear that in mind, and the US dollar pressure could do that, okay? However, what I've done is I've just also rearranged the count here a little bit to fit a bit better for an impulse wave to the upside for wave wave 3, 4, and 5 of a larger intermediate wave 4, and it would count like this: up for 1 here, an A wave, a B wave, a C wave here, and then up for 1 and back for 2 here. And then what we're looking for here is 5 waves up through here for wave 3, then 4, and then 5. So what we don't want to see, what a breakdown would be, what a breakdown in trend would be an overlapping of wave 1 here, or if we've seen this area here, the subgroup 2 area, especially the 1272 here as a retested resistance, then we've got a bear market on our hands from that stage there. Okay, so that said, the next degree of structure is the sub-levels here, and the group 1 here is really important, the top of group 1, so 10, 20 and 30. If support is found on top of 30, then we can look at 50 and we can move up from that point. However, we need to negotiate this particular top level through here, and if we drill into that here somewhat, it's kind of looking at it like this here. Looking at a 5th wave coming up here, but the 5th wave here would be 1 and 2, and this is all of the 3rd wave here, and the 3rd wave's not finished. We get up to here for the 3rd, the 4th, and the 5th. So if that is the case, and we can drill into this in a moment, but we'd be looking at this here. This is corrective. See that little 3-wave structure? That's corrective. So we'll see that high get taken out. So in one way or another, we should see a little build up through here. And this is the classic trading levels pattern, the arrival, the reaction, the first high above the level, and then the A, the B, and the C here for the 4th wave. We should pull back 38.2% of the wave 2 here. So we can look at it coming back into this block of support here, or the 1320 sort of area here. Once that's been done and dusted, we'll look for a little 5-wave structure to the upside, making new highs here, probably up into the closer to the 1350 here, depending if the commodity is going to extend in its wave structure there. But this would just be the top of wave 3, if that's the case, and then we would see a wave 4 and then a wave 5 going further up through here, so forth, and climbing higher. But just got to point out that that point of failure that we just talked about, which is in the Elliott Wave section, would be from here. Okay, so so that's why we'll sort of watch this little area here carefully. Do I have that on a smaller chart here? Yes, right. Okay, so this is the way I was just counting this up through here. So from wave 2 here, from wave 4, from wave 1, wave 2, I was looking at this of all of wave 1 up to here, wave 2 to here, then wave 3 to here, wave 4, and wave 5 to here. But there's also a possibility that in this wave 5 here, that it can also be wave 3 here, and that would make this wave 4 over to here and wave 5 up, which would give us another wave to the upside, and that's quite possible. But I'm taking a minimum point of view here, a conservative point of view, because of possible termination of one of the structure up here. But as I just mentioned, you can see this 3-wave structure here, so we should make a new high here, which in reflect would give us 5 waves up. So from this point here, we see 1, 2, 3, 4, and 5 here. So this is basically wave 1, wave 2. So we would see, all things being equal, we would see 1, 2, 3, 4, and 5 here. Then we'd see the A, the B, and the C that can pull back to the 4th wave of 1 lesser degree, and the 38.2 retracement levels just a little bit lower down here. So we'll see something like this here, but we don't want to see the 1320 there become the retested resistance here, because that's a little pivot within group 1, and that would identify the market moving back down to 1300. So we're looking for a bit of a rough journey across the top here, but after we've got the first high above the level, then we're looking for support on the 1330 and you can go up from that point there. And silver's much the same as well. I won't sort of pull it apart too much, but basically a wave 4 coming up here, wave C, in 5 waves moving to the upside. As mentioned last time, we've got this nice wave 3 developing through here, and that's sort of it there. So while gold's working with 1330, this market's going to be working with 22 here. So you'll need to work with that. But the same sort of pattern as well, the arrival, the reaction, the first high above the level, then an A, B, C, and then finding support on the 2200. If that's the case, then you'll trade up to the 23 here. So there's still a session or two for that to unwind through here, as you can see. So we've had the arrival, the first reaction. We're looking for the first high above the level, and then some type of correction by this wave 4 or that wave 4, doesn't matter, but it'll be sideways, complicated, and all those sort of things. And after that, if it finds support on 22, well, then we can run from that point there. The copper market's moved up a little bit quicker than I expected it to, but that's nice. It's moved up to the 330, which is also the top of group 1. So now we really want that as support. So the market, so basically up here we've got 3 waves up here, so it can be corrective. I think that it's bullish because it's now overlapped the low of this one here. If this is 5 waves down through here, then this has moved up here and overlapped this, which confirms that this is an A and a B and a C correction. So we've got our first confirmation here. In trading terms though, we're going to trade from 325 to 330 or 328, I can't recall. But now we need to allow this to play out like gold and the other and silver and so forth, and then find support on that 330 there. So we've got our arrival, we've got our reaction going on, and then we want to see get our first high above the level, then an A, B, C across here, then support, and then you can trade long again. It's not that you need to trade long here, but what we follow this for is to get a good idea of iron ore. Iron ore moves in the same sort of pattern, and also that reflects back to the materials sector as well. So the BHP is making new highs, and we knew. I mean, everybody thinks the commodity thing's over, but I could see that the material sector, the XMJ, is stronger than the finance sector for a change. It's been like that for the last month, so that's why I've been sort of long on those sorts of products, so to speak. Yeah, all good there. Won't waffle on too much. Just wanted to point out. I'll go to the oil market now. So, once again, very much like the indices, we're looking for, a 5-wave structure up, not as big as this, but following stock up. But we are looking for a high here, okay? And as I pointed out with Brent crude as well a little while ago, that we've got this ABC correction here. So we'll be moving up, making new highs here. And even though that that Brent, that WTI here, Western Texas, was showing a lot of possible high here, I always knew because of the Brent that would be pushing up higher through here. What I can't really distinguish that well is where should this wave 4 be. I think I've got it in the right place of here being wave 1 here, wave 2 here, wave 3, 4 and 5 making a new high here. So that's what we'll look at. But once that 5-wave structure is completed, then we'll see the market fold back on itself. 1, 2, 3, 4, 5, which will be in line with stock basically, and we'll see it move back into this area through here and do its thing here. But that's what we're sort of looking at there. I'm just bringing the gas market into the picture as well. I know we don't normally look at it, but we're looking at Santos and some of those utilities that deal in gas and so forth. Look. Daily chart, it is a futures contract, so I don't have a lot of history here as such, and I will check it out. But I can see from this low point here, we've got 5 waves up for 1, back for 2, and then you can count with me here in the 3rd wave, and you can see it really starting to sort of kick off here now, the 1, the 2, the 3, the 4 and the 5 here. So we might have an A and a B and a C here, whatever, but we'll be making new highs above here. This $5 here is of course a major trading level here, so this is going to be important as such here. But I just thought I'd point this out because the other interesting thing here is that the real interest is this 1, 2, 3, 4 and 5 here. Once we get that, and then we get an A and a B and a C coming back in and checking it here, then we're going to have some really strong bull run here in gas. So that's what we're looking for here. So that's why I'm bringing it into the fold, but it's weeks away just yet. So anyway, that's that. I'm just going to save that there. We'll come back to that. We'll monitor this on an intraday basis a little bit later on. I've got to figure out what this is here. I mean, this could be the wave 4 here and the wave 5 just moving straight up here. That would be nice to get these 5 waves over and done with real quick, and then we get the ABC and move on from there. Okay, the soybean market. Now, on the daily chart here, the important thing here is that we've got increased volume here, high volume, and we've got a daily bar that's closed lower than it opened. That is a turning bar in a trend. That's the sellers coming in through there. We've always been looking for wave one to the upside here. I've always been a little bit unsure about the count. You know, it does look like a wave four, you know, worked in here somewhere because it's sort of sideways and complex, and the fifth here. So we can see a move back to the 1300 here, possibly, maybe not that low, but that's what we need to accommodate. And, you know, we've always sort of mentioned that. So, I've adjusted the wave count a little bit through here because I knew that the wave four's in here. I just couldn't sort of pin it. Now, the situation here, as the US dollar has got 5 waves to the upside, this has got 5 waves to the downside here. So what we can expect here is we can expect, at minimum, we can expect something like this here before we see any upside. It may get further to the downside, but this 5 waves here will give us another 5. So just drilling into that a little bit through here. Sorry, all this is a bit messy here, but just basically what I wanted to point out is just that you can see 5 waves there. The 1, the 2, strong third wave, the 4th and the 5th. So that being the case, somewhere down here, not sure where, haven't pulled apart the 5th wave here, but we'll see a retest of the 1350. May not go that high, it may just come to here, it may go to here, and then move down from here, but that's what we're going to get. We've got 5 waves here, we'll get a counter trend, we'll get another 5 here. So once we can work out what this bigger picture is coming back through here, if it is corrective, then we'll be moving into to add to positions or to buy fresh positions from that point. So if you wanted to get out and take a profit and deal with it, this is the place to do it. Be on the retest here, okay? But don't expect it to come back to 350. That's just possible. When a market retests, it will come back to the supply levels. This is one here, just above the 1340, and the other one is obviously back up here. So just depending on situations. The wheat, looking at this as well, daily chart here. These markets were closed last night, so there's not a lot going on here as such. So if they were open, they're on low volume, but I can see that the prices haven't changed at all through the wheat and the corn and the orange juice. So, but anyway, it's just reacting to the 600 here on high volume, which is expected, but we need to see what follows through from this point here. And with that in mind, we're still looking at a bullish trend to the upside. So right from the low here, we had 5 waves up here, so we're looking for another 5 waves. We've got those 5 waves now. So this could actually be an A and a B and a C here and fail from the 600 and move down from here. We've always been aware of that. So we just need to work through it. So we wouldn't call it a bearish market until the 572 here became a retested resistance, basically taking this low out here. That would be the confirmation that it's a bear market from that point there. So yes, there will be reactions from here, and we'll get something like I've just pointed out over here, some sort of corrective ABC through here. So let's just see how that pans out, but do expect weakness here. So if you've got money in this and you want to take it, then this is the place to take it at 600. The corn is in the same boat as well. The weekly chart here, the 450 is still giving us resistance up there as expected, but we are seeing increased volume here on each bar through here. It's just that this bar here is the first sign of weakness, but we expect that weakness coming into the midpoint there. So it hasn't sort of collapsed just yet. And the wave count that we were looking for here is like the other markets. We've only got 3 waves up, 1, 2, and 3 here. So it can be an A, B, and C, but possibility of building the beginnings of a larger trend. But once again, we've only got 3 waves here. If we had those 5 waves, 1, 2, 3, 4, and 5, then we know where we are. Then we would get the corrective move here, and then we'd buy here again. So basically, we're in here at the moment in this motive wave here. We're just in here, and we need all this to play out here to work out where we are, because it can fail from this point here. It's just something that we need to work through, and yeah, we're doing that. The orange juice is the same as well. Same again. This is sort of interesting, this one here, because I know that this is all corrective here. I know that this move up through here is 5 waves. So that means that once this correction here is finished, we're going to get another 5 up there. What I don't know though is this the wave 2 here, or do we get do we get the C wave coming in through here in terms of 1, 2, 3, 4, and 5, and then moving up through here. So making this basically an A wave, well, A wave, a B wave, and a C wave to here. That I don't know. But what we could say is that a move under the 140 would confirm that situation. Even getting to that a little bit earlier, if the 142 became a retested resistance, broke this trend line, that would be a weak spot there as well. But as it stands, you know, we've got up for 1 here, back for 2 of 1 degree. This can be up for 1 of another degree, and an A, B, C pulling back 50-60% from this point to this point here. So it can be intact. But it does look a bit weak. It looks weak in the terms that it moved down quite quickly and it struggled to the upside and dropped quickly as well. So that is a bearish personality situation happening here. We'll see, as I mentioned before, we need to see how the US dollar impacts on each individual commodity, and we can, you know, bring that into the mix as well with our levels and our Elliott. All right, that's that. Cheers.